Welcome to Fall into ETF Investing. On today's special episode, our panel of guest speakers will be discussing the run-up to the U.S. election, ETF strategies.
Thank you for joining our Fall into ETFs special edition of ETF Market Insights. I'm Erin Allen with BMO ETFs. ETF Market Insights is a weekly series that looks to provide do-it-yourself investors with important insights to help them manage their own investments. In this episode, we'll be discussing the run-up to the U.S. election and what it means for your portfolio. Today, I'll be passing off my hosting duties to Adrian Barr, also known more widely as Canadian in a T-shirt. Adrian is a personal finance content creator who's passionate about investing, taxes, and money-saving best practices. Before I turn it over to Adrian, just a quick reminder that today we're not providing any investment advice or recommendations. Today is all about education. Adrian, take it away.
Thank you for joining us today for this special edition of ETF Market Insights. Today, we're going to unpack the potential results of November's US presidential election and what it may mean for your investment portfolio. Election years can come with their fair share of market volatility as investors learn about potential future policy changes. And today, we're going to look at opportunities within different sectors and areas of the markets and some ideas around portfolio positioning. Joining me today is Bipin Rai, Managing Director, Head of Portfolio Strategy for ETFs at BMO Global Asset Management. Bipin is highly regarded for his macroeconomic insights as well as his knowledge of market structure for various asset classes. He has won several awards for his research from various publications and is a regular contributor to many business media outlets. Bipin, can you start things off for us by giving us a high-level overview of the U.S. political landscape and what that has meant for recent market volatility?
For sure, Adrian. I think that's an important question to ask, and especially to contextualize the political backdrop right now and compare it to where we've come from over the, say, past 10 to 20 years. I think one of the key changes now relative to back then is the fact that deglobalization and friendshoring, let's call it, is much more accepted now between both political parties, whether it's the Democrats or Republicans. So that's not really going to change all that much. What we do tend to see some degree of divergence between the Democrats and the Republicans are on things like trade policy, right? Tariffs, on immigration, on regulation. And, those are the areas that we think that we're going to see, some degree of concern or stress when it comes to market volatility. For instance, let's take the Republican, or at least Donald Trump's proposal to potentially hike tariffs. Again, not just against China and Mexico, but a universal tariff against other trade partners as well. I mean, that's something that the market does need to take into consideration, because ultimately what that does is it makes the Federal Reserve's job much more difficult when it comes to containing inflation. Additionally, any sort of further restrictions on immigration could also portend towards a much more inflationary backdrop than maybe the markets are ready for. On the Democratic side, I mean, there's a lot more focus on, say, let's say tax credits for small businesses or for first-time home buyers and the like, and potentially that's going to be funded by a hike to the corporate tax rate as well. So again, there are things in there on the Democratic side of things which keeps things from at least a budget deficit perspective on a more neutral footing, but still means we're going to be dealing with sustained deficits for some time to come. And at some point, the market is going to have to reckon with that as well.
Mm-hmm. So adding on to that, I mean, historically speaking, we've seen unique market patterns during election years. Is this year following those same kind of trends, or is this different from previous elections?
Well, it's again, speaking towards contextualizing election years, say this year versus prior years, I always think it's important to look at the backdrop, right? So if we look at the 2008 and 2020 election cycles in the United States, very different from a macro landscape. We had the great global financial crisis in 2008. And of course, we had the COVID-19 shock in 2020. So again, obviously we're not dealing with the same sort of backdrop when it comes to that lens. But one thing we have noticed is that if we look at the S&P 500 this year to date, compared to those other election years going back, let's say 3 decades, this is the strongest rally we've had in the S&P 500 year to date before an election. And I think that's quite meaningful because it's been driven by a couple of sectors, including the technology sector, and you haven't really seen as much participation from small and mid-sized caps relative to potentially to prior election years. So that is the one difference that we're kind of looking on and really focusing in on. Despite who wins, we are quite optimistic on small and mid caps going forward from here. here. So again, there are some consistencies. There are other consistencies which we think are much more important in terms of framing things from a market perspective.
That's a great point, thank you. So we've seen various policy proposals on the table, namely around taxation and regulation. What are some that stand out to you as important for investors?
So I think it's important to really contextualize things from what other candidates is sort of running on. Now, if we look at the Republican candidate, Donald Trump, and what he's planning on putting forward as part of his presidency, it's really a rehash of a lot of the same rhetoric that he ran on in 2016 that got him elected. And of course, trade policy, that means potentially levying another 60% tariff on goods coming in from China. And also, he's mentioned a universal tariff, upwards of 20% levied against other trade partners, including, goods coming in from Mexico. So that's part of it. More restrictive immigration policy also factors into what he's been saying and really speaks to his base. And also, and I think this is very important, the 2017 tax cuts that he implemented are expected to sunset towards the end of next year. Now, he's also indicated that he's planning on extending those potentially as long as 10 years forward from now, and without really a plan to fund those tax cuts. Now, he's mentioned tariffs will do part of the work, but there's no academic research that's really supportive of that. So again, if you're looking at candidate Trump, potentially you're looking at a far more inflationary backdrop, which, as I mentioned earlier, makes the Federal Reserve's job of containing inflation much more difficult. Now, if we look towards the Democrat side of the agenda, there's a lot of, say, budget neutral plans being put in place, and that includes an extension of tax credits for small and medium-sized enterprises, first-time home buyers, home housing developers, let's say. But there's also an increase to the corporate tax rate from 21%, which is where it is today, potentially as high as 28%. Now, Trump has indicated that he would actually cut the corporate tax rate. So again, a bit of a divergence there in policy. But regardless of who the president is, in this environment, it's very hard to run a campaign on, say, consolidating the budget and making sure you get back to the black when it comes to your budget forecast going forward. So if that is the case, and at some point the market is going to look at these sustained budget deficits and start worrying, and that potentially could mean a lower US dollar, and it could mean higher interest rates, particularly further out the yield curve.
No, there's definitely some clear, stark differences between the two candidates. But are there any policies on either side, Trump or Harris, where you can see them leading to an investment opportunity for those looking to make a more tactical approach?
Right. So, we've talked a little bit about what both candidates are going to run on. And again, we have to also remember that the race for the presidency is just one race that we're going to have to pay attention to when the election comes. And again, when it comes to the legislative process in the United States, remember that the president can outline plans, but they can't table legislation in Congress. And, we also have to pay attention, or at least that means we have to pay attention to races in the House of Representatives, in which case all 435 seats are up for grabs. And we also have to pay attention to what's going to happen in terms of the Senate. And of course, 1/3 of the seats there are up for grabs. So again, investment opportunities, we sort of, the markets tend to move on the race for the presidency, but realistically, what can actually be implemented is going to depend heavily on the makeup of the House and the makeup of the Senate. Now, right now, the Republicans are in charge of the House, but if you look at some of the odds that are out there, it certainly does feel like the Democrats could win the House of Representatives in early November when we have the election. When it comes to the Senate, right now the Democrats are in power, but they've got a razor-thin margin right now, so there's a good chance that we could see the Senate flip. But what we've taken from prior elections is that whenever you have these so-called sweep elections, which is when you have the same party that wins the presidency and also both houses of Congress, that tends to lead to a little bit more market volatility, right? And in that sort of case, it's a lot easier for the president to push through his particular agenda. And again, if the same thing does happen, let's say there's a red sweep, or the Republicans capture both houses of Congress and Trump wins the race for the presidency as well, that'll be very supportive for small and medium-sized enterprises based on Trump's tariff plans, and also potentially it could be beneficial towards gold prices as well. Because remember, if we do see this environment where Trump is able to push forward his plans based on what he's told us so far, this is incredibly inflationary and might not be beneficial for the US dollar. So in that sort of scenario, we like sort of ETFs that track small and medium-sized enterprises. that are hedged for currency risk, and also any ETF that's tracking gold prices. And we think those are going to outperform in that, at least from a tactical perspective, in that scenario. Now, let's take a step back and look at the alternative. Potentially, what if there's a blue sweep? What if we see Kamala Harris win the presidency and the Democrats take both houses of Congress? Well, in that sort of scenario, again, we envision that it's still going to be quite supportive for small and medium-sized enterprises. Probably not as bearish when it comes to the U.S. dollar, given the fact that her policies tend to be a little less inflationary as opposed to Donald Trump, and also there's at least a let's call it a more consistent path when it comes to the budget. In that sort of environment, maybe you don't need to at least be focused so much on the FX hedged versions, let's call it, of the small and medium-sized or ETFs that track small and medium-sized enterprises. It could also be supportive for ZCLN, given the Democrat push towards clean energy initiatives. So those are the ETFs that we would look at primarily. So, the other potential scenario that could play out is that we get a split Congress, right? Or a split sort of vote between, say, the executive, let's say, or Donald Trump wins the presidency and Congress is actually Democrat, or let's say if Kamala Harris wins the presidency and Congress turns out to be Republican. That sort of scenario portends to further gridlock. And of course, we've seen several instances of gridlock and government shutdowns in the United States over the past 10 to 15 years. That could be a supportive backdrop again for ETFs that track gold, including BMO's own ZGLD. It could also portend towards a more favorable backdrop for, let's say, ETFs that track factors such as quality or low volatility. So in that case, ZUQ or ZLU could outperform in those environments. So, that's the way we're framing tactical opportunities that could arise from this election. Of course, I've said a lot, which means that there's several different potential scenarios that could play out.
So there's definitely some uncertainty ahead depending on the outcome. So given the current US political landscape and, as you said, the expectation for heightened volatility, what are some ways investors could consider positioning their portfolio a little differently to help navigate this market chop?
Yeah, so, we talked a little bit about the different scenarios that could play out. What is the most likely? I think that's a different way of asking that question. Based on what we're seeing in terms of the probabilities, it does feel like we're going to end up with the last scenario, right? So we're going to get a split Congress or a split vote between the executive and the makeup of Congress. Now, that sort of environment, and it does feel like that is going to be the most likely one. Perhaps reorienting your portfolio to focus a little bit more on quality in this environment. Again, that's a factor that's done exceptionally well, especially when it comes to generating alpha relative to the rest of the market. So ZUQs will continue to like. Also potentially focusing on small and medium-sized companies as well, because regardless of who wins, I think there is this one common factor, or at least one common stream of thought on both sides, is that they want to do what they can to help those small and medium-sized enterprises grow. So potentially looking at something like a ZSML or a ZMID, whether or not you want to hedge the currency risk really depends on the candidate. But I think that could be something that does outperform in that backdrop. And of course, ZGLD, which tracks our gold bullion. That's our ETF that tracks gold bullion. I mean, that's, does feel to me that could potentially continue to perform. And that's largely a result of the fact that, there are downside risks potentially to the US dollar over the medium to long term, based on the, quite frankly, unsustainable track for budget deficits going forward. But there are also some broader macro trends that, at least at this point, do support the price of gold bullion. And again, those are sort of ideas that I would say potentially, investors should consider in the run up towards the U.S. election. Now, mind you, we're recording this in early October. The election is still 30 days away. We're still that's eons in terms of U.S. politics. So again, but from this vantage point, it does seem like that's probably the best chart, or at least course to follow.
Wonderful, great, I appreciate that. So Bipin, great insights today and a lot to think about as we head into November 5th and this closely watched race between Trump and Harris. You've given us a lot of ideas around how this could impact our investments and some opportunities that might arise. Thank you. Thanks to the viewers and to BMO ETFs for having me on the channel today. Have a great day.